Hey everybody, it's Janice Allen with Jaqua Realtors in Kalamazoo, Michigan, and I'm your local real estate advisor. And I just want to say thanks for tuning in to the 2021 October Market Report for Kalamazoo County. It's currently November 2nd, 2021, and I'm going to walk you through everything that you need to know this month about the housing market. So here we go. I'm going to start off with pricing. What you are seeing in the headlines is that prices have peaked. Price increases will slow later this year, which sparks questions and uncertainty. What I'm going to bring for you today is some context and clarity of what's really going on with prices. So let's take a look at our local market in Kalamazoo County. Now I'm comparing the latest full month of data that we have from MLS, the Multiple Listing Service, for September 2021 as compared to last year, 2020. So single family home prices continue to rise, which isn't a shocker. The year-to-date average sales price in 2021 is $265,000 in comparison to 2020, which was $225,000 from this time last year. That's an increase of $40,044, which is a 17.8% increase. This is well above the normal housing appreciation rate, which is 3.8%. So the reason that prices keep going up is we have an inventory challenge. We simply have not had enough homes on the market for the demand from buyers, and that's what's causing the prices to go up. Let's talk about price appreciation. This is happening all across the United States. As you can see from this price appreciation map, year over year for the second quarter of 2021, the states in red have over 20% appreciation over the past year. As a whole, 17.4% for the United States. But you can see how it really breaks down by state right here. Michigan's average price appreciation for the whole state as of the second quarter was 17.3%, whereas our local market in Q2 was at 21.1%, which is amazing. So what is the forecast for prices? Are they going to keep going up? Experts say that home prices are not expected to decline, but are expected to appreciate at a much slower pace. So let me show you what that means. This is the estimated home price performance, and it's from the Home Price Expectations Survey. So what we can see right here is that through the rest of 2021, home prices are expected to continue to increase at 11.74% across the whole United States. And going forward, as we look at 2022, 2023, and beyond, we're seeing continued appreciation, but at a much more moderate pace, 5.82% for 2022 and so forth. So what that means is that home prices are not expected to decline. They're just expected to appreciate at a slower pace. In terms of days on market, of the 3,174 homes that sold, on average, it's taking 16 days to close, whereas in 2020, it was taking 33 days to sell. That's a 51.5% increase, or a little more than half the time to close. And I know lenders and appraisers are working their butts off to get loans closed in record time because there is so much demand for new mortgages as well as refis right now. And we're seeing more qualified buyers in this market who have all their ducks in a row. In some instances, the banks are waiving the appraisals. So let's take a look at price range in our local market because things are not always the same by price point. So whether you're looking to buy or sell in Kalamazoo, these are the numbers that you need to know so that you know what's going on in the market for your particular price range. So as you can see from this graph, finding homes under 100,000 are getting harder to find. Homes under 100,000 are pretty much a disappearing price range. We have had the most sales in the 100 to 199,000 price range with a cumulative days on market of 12 days, and the second highest number of sales year to date in the 200 to 299 price range with only 18 days on the market. So as you can see, the higher the price range, the longer the days on market. But all in all, to get a home sold in the 300,000 price range, it's taking around 28 days, a little over a month in the 400,000 price range, and almost 1.5 months in the 500 to 999 price range, and a little over 2.5 months if your home is $1 million or more. So things are definitely selling fairly quickly. It just depends on your price range. Inventory is still a challenge, and when we look at active listings, year to date through September 30th, 2021, we had 3,174 homes on the market, whereas last year through September, there were 3,252 homes on the market. So we're down 2.4% from this time last year. And what typically happens in our business is listings peak sometime in the fall, and then they drop off, and we repeat that cycle again. So there's nothing to be alarmed about. Let's take a look at this. So as those listings dropped, the number of sales went up. Year to date through September 2021, there were 1,837 sales versus through September 2020, where there were 1,756 sales. So sales, they shot up by 4.6%, while listings are down. Sales are rising as well as the sales price. Now, the other big story right now is interest rates. No doubt we're starting to see some movement in interest rates for a lot of different reasons. It's going to be more expensive for people to borrow. Right now, the 30-year fixed rate just jumped above 3%. And you see right here, 3.14% for a 30-year fix to be exact, as recorded by Freddie Mac on their weekly survey. So although mortgage rates are rising, purchase demand remains firm. This graph shows the latest projections in interest rates from Fannie, Freddie, the Mortgage Bankers Association, and the National Association of Realtors. And as you can see, somewhere around the middle to the third quarter of next year, rates are projected to be around 3.5%. So we're just starting right now to see a little bit above 3%, but the rates dropped through the pandemic, and now they're starting to inch back up. Freddie Mac is saying by the third quarter, rates could be around 3.7% next year. When the interest rates go up, it's going to cost you more in the long run to buy a home, and certainly to finance a home. Right now, with rates being as low as they are, it allows you to buy more home. But as you can see from this example, somebody going to purchase a $300,000 home, if we look at 2 3/4, which is where we've been at for a while, that payment is about $1,224 a month. But if we go up to 3%, it's $1,265 right above that. So if the interest rates go up in the next year, like 4%, that rate now allows you to buy a lot less home, like around $260. So I'm not trying to convince anybody to do anything that they don't want to do, but I want to show you that as prices rise, as interest rates rise, it's going to cost more in the long run to buy a home, and certainly to finance it. As always, my market report is intended to give you everything that you need to know, the insights, the data, and all the information that you need at your fingertips so that you can be educated about the market. So I'm grateful for your support and for taking time to listen to this. And if you found this information helpful and you're watching it over on YouTube, click that subscribe button, because I do have videos that come out each and every week. And if you have any questions about what your home might sell for in today's market, give me a call or visit my website. I'm Janice Allen with Jaqua Realtors and your MichiganHomeGirl.com. Bye for now.